What's up, my oh so beautiful people? Today we're going to be talking about how you can improve your credit score and what exactly does your credit score consist of. And we're going to just jump right into it. So if you didn't see my last video, we talked about buying your first rental property. And one of the components of buying your first rental property or a property in general, or buying anything where you need to take out a loan, you're going to need a really good credit score, especially today in today's financial economy. You're going to need to have some good numbers. What is your credit score? I'm just going to give a very simple definition for it, very high level. Your credit score is a score that determines or help the lender determines if you are a responsible and trusted borrower. If you have a low score, they say, we can't really trust this person. This person has a few dings on their account, or they're just not responsible with borrowing money. And then if you have a high score, they're like, okay, we can trust this person. They pay their loan back on time, and it won't be much of a risk if we were to lend this person money. Your credit score ranges from 300 all the way to 850. Now, if you're closer to the lower end, 300 to about, I want to say 600 points, you're more of a risk to the lender. And again, the lower you are from 600 down, they're going to say this person is a high risk and we're going to charge them, a high interest rate to borrow from us. But if you're 600 and above, and 600 being like the fair median, if you're 600 and above, like all the way to 850, they're going to say this is a trusted lender. We can let this person borrow money and we can charge them the best interest rates, which the best interest rates when you're borrowing money is the interest rates that are lower, the lowest interest rates. The 5 main factors that make up your credit score is 1, payment history at 35%, 2, credit utilization at 30%, 3, length of credit history at 15%, 4, credit mix at 10%, and lastly, number 5, new credit at also 10%. And we're going to get into more detail like at each category or at each factor so that you can improve your credit score, and not only improve it, but focus on the factors that mean the most is going to make a huge difference in your credit score reporting. Okay, so payment history is the highest of all the 5 factors. This is at a whopping 35% of your credit score. And your payment history is just a track record on how well you pay back your loan and your credit on time. So if you want to increase this number, again, it's 35% of your credit score factor, right? So if you want to increase your payment history number, you have to pay your bills on time every month, okay? This is the best way to improve that. Next is your credit utilization, and that's at 30%, right? So payment history is at 35, credit utilization is at 30%. And what is credit utilization? Credit utilization is how much of your credit that you have available that you are using. Now, experts suggest that you always stay under that 30% credit utilization amount. Okay, so what does that mean? So if you take the total amount of credit available that you have, let's just say, to make this very simple, that you have $1,000 worth of available credit, and you don't want to spend more than 30%. So 30% of 1,000 is $300. Again, your credit utilization is 30%. So experts suggest 30%, don't go over 30%. I would suggest that you don't even toy around with that because it's easy to go over that. And I would suggest just 10 to 15%. That way you're always under that number. If you have any hiccups, if you have any, problems, because we all fall into some kind of financial problems, you're able to not get as hurt or affected as much your credit score than if you were to always use 30% or higher. So I would suggest between 10 to 15% of utilization. Now here's a bonus tip. The more credit you have available, the more of the utilization you can use. So what do I mean by that? The example we gave was $1,000, right? So that means you can only spend $300 because, $300 or less, because that's 30%. But if you have $10,000, that limit goes up, right? If you have $100,000, that limit goes up, and et cetera, and et cetera. So the bonus tip is the more credit you have available, the more that limit goes up, but you should still stay, I would advise, or I would suggest, under 10 to 15% of credit utilization. Next, we have length of credit history. Now, this one is if you're younger like myself, or you didn't have credit for a long time, this one is where you would pretty much have a low score. But seeing that is only 15% of your credit score, you have a little leeway here, but you really don't start seeing this getting to a good rating unless you have credit history that's more than 5 to 7 years. The longer credit history you have, the higher the score would be. So here's a bonus tip. Have you ever heard people suggest people improving their credit by attaching their credit or getting on someone's line of credit that's their sibling, like their older brother or their mother or their grandparents? One reason why they suggest this is because the credit history is so long. So if you're just starting off and you're 2 to 3 years into building your credit, if you attach yourself to like your grandparents or your parents, where they have 10 plus years of credit history, this can substantially increase the credit history length and by a lot, right? So if you attach yourself to somebody who has a long credit history, that can boost up that number in a higher percentage. And again, that's only 15% of your credit score. Okay, let's get into credit mix. So credit mix is 10% of your credit score factor. And your credit mix is basically the different lines of credits that you have. So you have your credit card, you may have a shopping cart for your favorite store, that line of credit. I don't know who doesn't have student loans. Well, I don't. I paid them off. Yay. If you didn't see that, go check out that video too. And also like your car loans, your mortgage. So the mixed credit is pretty much all the different lines of credits you have in different categories. And again, that's 10%. Now you want to be cautious with the credit mix, right? Because it's good to have a lot of different categories, but if you can't pay them on time, it's still going to affect your credit. So yes, the more mix you have will increase that credit mix number, that 10%. It will increase that, which will in return increase your credit score. But you want to be cautious. You don't want to have credit lines all over the place that may be unmanageable, and then you happen to mess up your credit score in return. So be cautious with any of these steps and make sure that you are practicing financial well-being and management. Okay, lastly we have new credit, and new credit is just 10%. Just like credit mix, new credit is only 10%. Now, new credit is how many new lines of credit you open in a year. Now, I'm going to say a year because experts suggest that you open one new line of credit per year. When you go and open multiple credit lines per year, let's just say you be like, I want to open 5, 7, 10 credit cards this year. The lender is going to be like, okay, this person is a risk because they may be using these multiple credit cards to pay off their debt obligations. So they're going to ding your credit score. So when you're opening a new line of credit, experts suggest that you open one new line of credit per year. Now, if you're a bit on the high end, like 780s to 850, maybe you could get away with 1 or 2 or 3. But in order for you to improve your credit score, to make bigger purchases and take out credit from a lender, I would suggest that you stick to what the experts say and just do 1 per year, or even 2 if you're on a very high end, again 780 to 850 credit score while you're opening a new line of credit. Okay, so now that we talked about the 5 main factors, I want to leave this last part just going over some of the bonus tips that I use to increase and to keep my credit score above 750, above 770. I'm gonna show you my credit score like right here. Here's a little video of me looking at my credit score just to show you guys that, hey, I'm not just talking about this stuff, I actually live this, I actually practice this, and I want to see you get better, so that's why I'm making this video, all right? So one of them is going to be, you do not want to take on too much credit, okay? We talked about that briefly with the new line of credit, but you do not want to take on too much credit. Number two, you want to pay off your debt and keep a low credit amount in your accounts, okay? That's why I'm always stressing, pay off your debt, pay off your debt, pay off your debt, right? Because when you pay off your debt, the more funds you have available, and you start to reduce that line of credit, right? So it's very important to keep a low credit amount through your lines of credit and also pay off your debt. 3, do not close any of your accounts. Okay, remember we talked about length of credit history. If you have a credit card that you have for like 7 years, 10 years, and you're like, I don't even use it, it's still in my account, do not remove it, because when you remove it, you're going to be reducing your credit length history, right? So you want to keep that on your account, maybe even pay your cell phone bill 1 month with that card, or, if you have a Home Depot card or a Lowe's card, go to Home Depot or Lowe's and buy a bag of chips or something like that and put it on the card. Make a very small purchase on that card just to keep that card revolving and keep it alive and active, so that you don't lose that percentage, which is 15% credit length history. So you don't lose or deduct from that percentage because you close an account that has a long history. So do not close your long history accounts. Try to make minimum payments on it, or try to make a small little amount of payment on it so that you can keep that history length. Lastly, I'm gonna just, there's many others, but I'm going to hit you with this one because I feel like it's very important. If you see any inconsistencies or inaccurate information on your credit report, please dispute it, okay? Always report it, right? Because it could be false information on a previous job. It could be somebody may hack you or stole your identity. It may be someone, put you in collections and is affecting your credit score. But you always want to dispute these transactions that do not look familiar to you or inaccurate, okay? This is going to help you, and this is going to keep your credit score going up and active, and just personal management, right? You don't want to claim something that's not yours, and you don't want something to affect you that you didn't do, right? So make sure you dispute all inaccuracies and all things that are wrong in your credit score, or things that not familiar to you. And there you have it, my beautiful people. That is how you can improve your credit score, and what actually, determines what your credit score is. If you have any more questions, please let me know in the email below. If you thought this information was useful, please like and please subscribe. I think it's so cool that I see a lot of people viewing my videos, which I'm pretty super excited about. But a lot of them aren't subscribing, so please do me a favor, help this channel out, help me help you provide better content. Subscribe, like, that way we can build this channel, and that way I can invest in a microphone, because I know you guys hear all the echoes. If you haven't done so already, go check out my other videos, and I'll see you on the next video. Thank you.